Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Oliver Crook. We're an hour away from the opening trade. Here's what you need to know. Markets holding their breath for the world's most popular stock to trade. Nvidia reporting today with investors betting on another blowout quarter. Meanwhile, a shakeup at HSBC. Bloomberg learned the bank's incoming CEO is considering cutting layers of middle management when he takes charge next week. Plus, Washington's National Security Advisor Jake Sullivan meeting with the Chinese Foreign Minister Wang Yi, in Beijing against the backdrop of an escalating trade war and geopolitical tension. Ollie.
Yeah, Kriti, let's take a look at the markets this morning ahead of the cash open, just about an hour away. Euro Stoxx 50 futures, after a flat session yesterday, up about 10 basis points this morning, not seeing much action. The FTSE 100 futures, they're fully caught up now after being closed on Monday, up about 1/8%. Sterling, something to watch today. I mean, we're at the highest levels on sterling we've had since 2022. That is sort of losing a bit this morning. And the euro dollar, of course, we're watching it all week. European CPI data. We also heard from Klaus Knot yesterday. One of the more hawkish members sounding a little bit dovish. The countdown to the open starts right now.
Wednesday, the 28th Nvidia day. The numbers drop at 4:20 p.m. Eastern time. To be honest, nothing else matters today, certainly from a financial market point of view. This is it. Forget Powell, forget everything else. It's Nvidia day.
Is it not connected, though? Is it not, the to your point, nope. the macro event? Done? Are we done with the show?
Absolutely. Let's move on. We can just wait. 4:20. Nothing else matters between now and then.
Here's why it matters. It's not just a micro event. It's a macro event just as much. In that, I imagine Jay Powell is keeping his eye on this as well. This has a ripple effect. Sure. We talked about it with Mark Cranfield. You're trolling me this morning. It's a lot. It's a lot for Nvidia Day. But this is important. Mark Cranfield made the point in the last hour that this is going to have repercussions for every global market, not just the tech sector. You're going to see a gap lower potentially in the Asia session. Crypto, bonds, they're all going to trade off because this is a risk gauge as much as it is a micro gauge.
I mean, absolutely. The central bank of NASDAQ reporting, right? Is it going to be a hawkish cut to the outlook? Could it be something a little bit different? I mean, these are the terms in which we're talking about this. Yeah. I do wonder about the low volumes with a high volatility event today happening and what that could mean for the broader market. Because obviously yesterday, S&P lowest volumes, second lowest volumes I think we saw all year.
Yeah, everybody was taking the day off before today. Maybe
Perhaps,
tomorrow's the big day. Look, it really matters. It matters. I'm joking with Kriti. It does matter because it affects financial conditions. Yeah. You see big swings. You see a lot of volatility. It was only back at the beginning of this month that we saw big swings in the S&P, and everybody suddenly is panicking and calling for cuts from the Fed. Now, this is different. That was related to what happened with the payroll numbers, but this does affect through financial conditions what happens in the global economy.
And let's just put some numbers on it. It's very handy. We're seeing the element on the screen right now here, which really shows that for the very first time, we're actually seeing downside protection show up in this market, not by a major margin, but enough that your 5 biggest options in the S&P 500 are downside options. And we actually haven't seen that in previous iterations of the Nvidia holdings. And also add 10% swings expected right now off the back of this in either direction. It's about $300 billion worth of value.
It's going to be an exciting day. 4:20 p.m. Eastern. That's when you want to kind of tune in. Make sure you're watching Bloomberg because we've got some great coverage coming up. Bloomberg Technology has a half-hour special today. It's really important because that half hour is also going to include an exclusive interview with the Nvidia CEO. This man, Jensen Huang, is going to be talking to the tech team here at Bloomberg. I can't wait. I'm going to be tuning in. I might actually stay up late for this.
A little late for you? Past your bedtime?
This is definitely past my bedtime, but it's Nvidia. It's Nvidia Day. Nothing else matters. I'm going to tie 2 stories together now. We need to talk about what is happening with the story surrounding HSBC. So you've got this. He's not going to take over until September the 2nd, but George El-Hedri apparently is planning to cut significant layers of middle management out of HSBC. This is Europe's biggest bank. This really matters. It matters for Asia as well, where I suspect a lot of these jobs may ultimately be based. He's basically taking the Jane Fraser playbook and potentially delivering it at HSBC. But the reason for this is as well that we are seeing interest rates potentially coming lower. That's going to affect net interest income. And that is why I wonder whether Warren Buffett is selling lots of Bank of America stock.
Yeah, I wonder about that because you sort of have this awkward phase right now for banks across the world, right, where you still have elevated interest rates. Maybe that's pulling back on activity, whether it's M&A, whether it's lending businesses. But at the same time, that net interest income is getting squeezed as things go on. I mean, we talk about it with Deutsche Bank every quarter, and really for them, costs are very much.
You've got to cut costs, and this is about costs. This is the cost story. It's not just in terms of what we're seeing in terms of the headcount story. It's everything. It's entertainment. It's travel. These banks are going to be cutting back. It's going to be interesting to hear what the airlines have to say on the back of that. That's my bailiwick to see whether or not we do see corporate travel beginning to get reined back in again. Big banks are big travellers, and you do wonder whether that's going to be an effect coming through as well. But it's interesting that you're seeing this Warren Buffett story as well. He's still the biggest shareholder in Bank of America, but he is offloading stock again in this business.
Well, I just want to bring it back to the comment you made at the very, very start of this, which is he's taking the Jane Fraser playbook. And that was in response to a really suffering price-to-book ratio that Citigroup had relative to some of his peers. HSBC doesn't have that problem, which I thought was fascinating in terms of taking that approach. But we'll see.
They've already cut quite significantly already.
Yeah, I mean, also looking at them in sort of this year, I mean, they're down. I mean, they're basically up 4% this year versus the stocks banking index, which is up by 18%. So really, some room for them to move up potentially.
But there is the China trade in that as well. So they are heavily Asian focused, and you do wonder whether this is also part and parcel of the idea that we're going to be seeing becoming more Asia-focused. Talking of the Asia-focus.
That's right. We have Jake Sullivan. We need to talk about him. A little bit of geopolitics this morning, arriving in Beijing. He met with Wang Yi yesterday. We had some reports potentially there could be a meeting with Xi Jinping. This is something that obviously we're watching very, very closely because the big sort of, I think, geopolitical threat these days is down to the sort of trade war, its impact on inflation, slowing things down. The problem is with these sorts of meetings, it's significant because it's the first time the National Security Advisor has been in China in almost 10 years, since 2016. And really these sort of back-channel conversations, though they may not yield something concrete in the sense that, there's still a lot of tension, they are really the shock absorbers between the sort of leaders between these two countries. So I think it's significant that this is actually happening right now.
Well, I think what's significant is in addition, of course, to the historical precedent, is just the amount of things that are on this docket. Because one of the key pieces of reporting that I've seen has been that this is a conversation as well to have China pull back some of that support or be a little bit tougher on Russia when it comes to what's going on in Ukraine. It comes, of course, as we're trying to figure out what Ukraine's kind of incursion into Kursk actually means, what to the nuclear risks around that. And I believe there's a plan as well that Vladimir Zelensky is expecting to put towards Biden. How does China play a role in that when they're also trying to play a diplomatic role in the Israel-Gaza negotiations as well, not to mention their own issues in the South China Sea?
But this is all about to change, isn't it? We're about to have a general election in the United States. This is the end of the Biden administration's relationship with China that we're watching here, and how you can ring-fence some of the gains, some of the opportunities that have been generated, some of the progress that has been made. I think it's going to be really interesting to see how Sullivan tries to pitch that, because that in some ways is what this trip really is about.
Unless Kamala Harris gets elected.
But even so, I think it's a new administration. It feels increasingly like it is a new administration, and he's been very clear in the language he's used up in the build up to this that he is not going to try and influence that process. This is about this administration, not the next administration.
But I wonder if China uses that as kind of a reason to maybe not do that much, just kind of have a little bit of some diplomatic exchange and then call it a day and not actually have something tangible to present.
They may want to work with him because maybe they fear the Trump administration more than they fear
the Biden.
The Biden, to your point, maybe / Harris administration. Let's talk about what we're going to talk about throughout the show. We've already kind of laid it out. It is Nvidia Day. To be honest, financial markets are on tenterhooks, waiting to see exactly what's going to come out at 4:20 p.m. Eastern. Vontobel's Dan Scott's going to be joining us to talk markets. Investors waiting those Nvidia numbers. We're going to dig deeper into what we can expect from the AI chip giants numbers with Liontrust fund manager Clare Pleydell-Bouverie. She's going to be joining us as well. Pleydell, even. City's luxury.
You got it.
It's too much. Lucy Baldwin is going to talk us through the Open. Plus, Elizabeth Ingleson of the London School of Economics is going to join us to talk about trade and Jake Sullivan's trip to China and what we're going to see coming up there.
Bravo. Made it through. Let's talk about the other daybook stories as well. We got U.S. mortgage applications, 12 p.m. UK time. Not a really tradable event, but we could make it a tradable event in the coming months. I think the reason I say that is because there's been some great analysis here in terms of whether or not the end consumer, regular home buyers, are actually looking at some of these rate cut expectations saying, should we dive in? Do we start to see that? Maybe not in this data set, but in the data sets to come. We've also got the Paralympics opening ceremony in Paris kicking off 8 p.m. UK today, 8 p.m. today. See?
Keep going.
It's the Guy Johnson effect on me already.
Don't blame me. Don't blame me.
And as Guy also put it, it is Nvidia day, so those earnings coming after market. I think you said 4:20 Eastern time, so it's 9:20 UK time. Keep an eye on that. And then, of course, some central bank speak. BOE's Catherine Mann and Fed's Raphael Bostic speaking as well.
Two hawks talking there. What do you want to chat about? Do you want to talk more about Nvidia? It's going to be exciting.
What do you want to chat about?
I'm excited about Nvidia. I'm genuinely excited.
Which part, I think?
I want to know whether the Blackwell chip delays are significant. I want to know what's happening on that front. I want to know what it tells you about the rest of the infrastructure as well around this whole story, kind of what is happening, what is the bigger narrative here. It's really interesting to hear what Jensen Huang has to say about the whole ecosystem. So you're going to learn a lot of things, about a lot of other companies today as well, which I think is significant.
And particularly with the interview that Ed has got, I mean, we're going to be able to get into a lot of these topics. I mean, I also wonder about this sort of how does the China-U.S. situation play into things? Could you see disruptions in the supply chain for raw materials that go into these chips? I mean, these are the sorts of things that could potentially, have a material effect on Nvidia, which, as you say, there's been so much positivity priced into.
And the criticism I said in this last earnings cycle was that, is there a question of diversification here? Hyperscalers still making up like 45, 46% of that bottom line.
That. I think it's in terms of the top line, I think it's.
And he in the last earnings report was trying to say, look, we are trying to diversify. How far does he get with that, especially with the delays? To your point.
Well, it's going to be interesting. Our government's buying. Who else is buying? What does the order book look like in terms of how we're seeing companies develop? We're going to speak to Clare a little bit later on. I'm talking about Tesla putting in a big order in recently. There are other companies trying to get in on the act. Anyway, we'll talk more about that a little bit later. There are other things happening. I promise. I joke, but there are other things happening out there. The U.S. Special Counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Special Counsel Jake Smith has updated his indictment this after the Supreme Court ruled that Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee says the new indictment is ridiculous and should be dismissed immediately. The Ukrainian President Volodymyr Zelensky will present a plan to force Russia to halt its invasion of his country. He will present this to President Biden. He'll also present it to Trump and Harris. This just, of course, weeks before the U.S. elections. Zelensky says he'll also brief these candidates on the deal, and this will happen around this month's trip to New York for the UN General Assembly. Without specifying details, Zelensky says the plan compromises of diplomatic and economic efforts to make those happen. Make this happen, basically. The UK Prime Minister Keir Starmer is in Germany today for a meeting with Olaf Scholz, another meeting with Olaf Scholz, as I should probably say. He's aiming to advance talks on cooperation, deals covering everything from security to technology to clean energy, though negotiations are unlikely to be completed before next year. An agreement on defence is expected within the next few months. I think he's met him 5 times now. Already.
And you can understand why. Yeah, you can understand why, right? Because these are sort of two leaders that are kind of, most politically aligned within Europe. I think the issue that Keir Starmer has with the allyship of Olaf Scholz. He's not
going to be there for long.
Not only is he not going to be there for long, he's very sort of he doesn't have a lot of power right now. He's in an incredibly weak position within Germany. And if you get the feeling that within the UK, within France, within Germany, within the sort of big powerhouses of Europe, they're all so distracted by domestic issues, it's hard for them to put the focus on the sort of international and trying to sort of make their name on the global stage, particularly with Olaf Scholz. Although I do think one thing is interesting. There are two sort of left-wing governments that have a sort of very sort of intense focus on fiscal and not spending too much as well, which we have both in Germany and the UK with a tough budget finally coming through.
Music to my ears. I love that topic. To me, it was the fact that they that he's meeting with plenty of CEOs as well, and not just in Germany as well, but you have Rheinmetall, Siemens Energy was the other one, and then plenty in Paris as well when it comes to defense story. And I'm trying to connect the dots on why Keir Starmer would want that.
The security pact is coming. That's the first big piece of the puzzle.
Yeah, and you have to think about the volumes of money that the Europeans are willing to spend on defense.
Yep.
The UK is not part of the EU anymore, right? So they need to manage that relationship.
But it is part of the security arrangement, and I think this is the kind of the bridgehead in terms of fixing the relationship. You start with security, you work your way forward from there. But it is interesting that Starmer is turning down various opportunities, the Erasmus program, various youth-related projects. I wonder where he's building towards with this. He wants to fix the relationship. But how does he do that, I think, is open to interpretation at this point.
Well, speaking of mending relationships, we're going to be talking about more of that in a different part of the world. U.S.-China relationships, of course, also in focus. Jake Sullivan, as we discussed, the first U.S. National Security Advisor to go to Beijing in 8 years. Plus, we'll see how HSBC shares open after the potential restructuring news that we got overnight. But up next, as Guy says, it's Nvidia Day. It dominates the market's narrative, and there's plenty to talk about, plenty of angles. We're going to dive into all of them. If you have any questions of your own for us or our guests, dive into the conversation. IB plus BBTV Go is the function on your Bloomberg terminal. This is Bloomberg.
If that bounce back is above 150, I do see that bond markets will actually be selling off, which makes sense.
Yeah.
But I just feel the kind of message we've got from Powell, they are here to ease.
Yeah.
And it's hard for markets not to remove the possibility of a 50 cut, possibly not in September, but could possibly come in December as well.
Pooja Kumar, a senior rate strategist at TD Securities, speaking to this program yesterday, talking about how the central bank story is going to impact how the bond market is going to perform. Joining us now to discuss, Dan Scott, head of multi-assets at Vontobel Asset Management. Dan, great to see you. Are you risk on or are you risk off right now?
Guy, thanks very much for having me on. We're moderately risk on, and we maintain that position. We've been moderately risk on for some time, and we don't think it's time just yet to go risk off. Even though there are signs of a slowing in the economy right now, risk assets still look fairly appealing to us.
So you favor equities over bonds?
We still do, yeah. In our bond positioning, we still have an overweight in govies, an underweight in high yield. So from that position, you could say that we're, a defensive positioning within bonds. However, we are also overweight emerging market debt because we still think that there is tactical opportunity there. Within equities, we have an overweight position for the asset class. We still are overweight U.S. equities. We're also more recently overweight European equities. And on the U.S. equity front, we just think that, there's been a lot of concentration risk there. Overall, if you strip out, the biggest names, the multiples aren't as rich as they look on the surface. So we still think that there's some good opportunity in U.S. equity. And of course, U.S. equity represents quality and consistency and visibility in forward earnings.
Dan, it's Kriti in London. So overweight govies, overweight equities as well. That kind of sounds like you're saying that the correlation, even with that concentration risk, is turning pretty positive between equities and bonds. Am I hearing that right?
Yeah, I know. It's an interesting one, right? Based on what we all learned at university, we're kind of like driving with our foot on the gas and the brakes at the same time. And also, by the way, just to throw it into the mix here, we're also overweight gold. So we do feel that there are opportunities within sub-asset classes for taking risk. At the same time, we don't necessarily think that this narrative, the market being convinced that there's going to be a no landing or a soft landing really makes much sense. We do see signs of a slowing, and we do see cracks emerging. Kriti, we've discussed this before, so we're kind of in the camp where we actually do expect to see a short and shallow recession. And from that perspective, we think it makes sense to have, a bit of a barbell strategy and make sure that you're not leaning too far out the window here.
So if you do see that short and shallow recession, where does that show up in the pricing here? What do you not want to touch?
Well, this is why, especially in fixed income, we think that high yield doesn't make much sense at the moment because we expect to see spreads widen quite a bit more dramatically. Even investment grades, while there's, great, issuers out there, high quality issuers, we don't necessarily think that the spreads compensate you much for being invested there. So we do expect like the 10-year to come down. 3.8 is where we're at now. We've come down quite a bit, but we still think there's a little bit more that you can expect there. As interest rates do get cut, and we wouldn't rule out a 50 basis point cut in September. So that definitely is something that needs to start being priced in a bit more. And then on the other hand, if you take a look at delinquencies on auto loans, if you take a look at credit card delinquencies, if you take a look at the softening in the jobs market, which is also what Powell was mentioning, you can see now that, it's that second part of the mandate that increasingly becomes a focus. It's the job market, which is very clearly slowing. And when you have the job market slowing, that of course is going to have a knock-on effect on consumer spend, which is really what's been keeping the U.S. economy afloat for this, for this time. So we do expect to see, that end of the market where you have lower credit ratings, or, for example, among equities where you have exposure to lower income brackets starting to come under pressure.
And if you expect a short and shallow recession, when do you expect that to actually hit? And what do you expect the Fed to do? Are we going to have to see much more easing? I think we see 125 basis points through January. When does that come in?
Yeah, you see, this is the thing. We've been wrong because we thought it would have been here with us already by now. Hands up there. We expected it already to be with us. And it hasn't hit yet. And I think there's a number of factors that, play into that. And one of them has been the unexpected amount of fiscal stimulus that we've had that comes in various forms. On the one hand, you have the energy transition spend, then you have, military spend. And now, going into elections, of course, the idea that perhaps the fiscal spend is not over and it's going to be extended, because you might have the extension of the Trump-era tax cuts, or you have other types of fiscal spend from the Democrats. So that's definitely been something that's had an impact and has delayed the onset of the recession. Also, I'd say that excess savings built up during the COVID period also have lasted longer than we'd originally expected.
Yeah, and we heard something very similar from Klaus Knut yesterday, who was basically saying that monetary policy has been trying to bring down inflation, but fiscal has been moving the other way. I want to take you to Europe. What do you see there in terms of growth? Do you see a recession in Europe? Is it easier now to build slightly a more bullish case on Europe?
Yeah, absolutely. I think that the sentiment was very bearish. About 6 months ago, I think we hit peak bearishness on Eurozone assets. And I think that the macro has definitely troughed in the Eurozone. So from here on out, the risk skew, we'd say, is to the upside. Asset prices have reflected that to some degree, but I think there's a lot more that you can go, and you can really gain exposure to high quality assets on, equity and debt, and still be able to get some upside on prices. So I think the Eurozone still is underallocated, and definitely can, catch up in terms of valuations with other areas.
Dan, why are you feeling so positive about Europe? I look at the PMI data, it doesn't look particularly good right now. The service sector side looking better, but manufacturing is horrible. The ECB may not cut as much as we think, and certainly sounds more cautious than the Fed. Where's the positivity coming from?
Yeah, it's not necessarily positivity. It's just that I think that the market has been too negative. So I think that there's some upside skew here from a risk basis. And yes, the macro is, has not necessarily gotten much better, but I think we've seen the trough. We had a little mini recovery in manufacturing, which then completely fizzled out again in Germany. But I think that if you take a look outside the core, outside Germany and France, you can see that actually the periphery is doing quite well. Italy continues to, do very well, and so does Spain. So the periphery is actually doing fairly well. And I think that, Germany will start to improve as you start to see a recovery also from other regions. Remember, Germany is very China exposed. So we would need to see China managing to add stimulus in order to kickstart their economy, and that will feed directly through to Eurozone assets as well.
Nice to see you, Dan. Always a pleasure. Thank you, sir. Dan Scott, head of multi-asset at Vontobel Asset Management, joining us from Zurich. Thank you very much. It is Nvidia Day. We're going to talk more about it next. Clare Pleydell-Bouverie is going to be joining us. She's a fund manager at Liontrust. We're going to get her take on what we should anticipate from these numbers a little bit later on. There's some key areas of focus, not only with Nvidia, but also within the ecosystem as well. We'll talk about all of that next. This is Bloomberg.
30 minutes from the start of the opening trade. We are seeing green on the screen when it comes to the futures picture. Your Stoxx 50 futures higher by 0.2%. The FTSE 100 slight outperformance there. But again, emphasis on slight because everyone's really just waiting for those Nvidia results that we are going to get after hours. I believe it was told, Guy said 4:20 Eastern. 4:20 p.m. Eastern, circa.
Somewhere around there.
So somewhere between 9 and 9:30 p.m. UK time, we should get it. So certainly, I imagine everyone will be staying up for that. But of course, in the meantime, analysts on average are expecting that the company will project revenue growth of more than 70% for the current quarter. The options market talking about a 10% move in either direction. Let's bring in Clare, Pleydell-Bouverie, fund manager over at Liontrust, our Nvidia favorite, our in-house expert, it feels like, at this point. Walk us through kind of the risk factor here. Everyone's so excited about this. We're expecting another A-plus report. What could go wrong?
So the key risk factor, and morning, thanks for having me on again, relates to the possible delay of the Blackwell product launch. And speculation here has really meant that we haven't seen estimates move up to the same degree as we've seen with previous prints. Now, we think that the rumours around the possible Blackwell product delay really serve as a distraction from the overall demand picture. And we're expecting very solid numbers, meaningful beat and raise based on continued demand for Hopper and networking. The key, Nvidia has defied investor expectations quarter on quarter, and there are many complicated reasons for this, but the main one is actually very, very simple. We've just continued to underappreciate the level of demand. Big tech are in an arms race at the moment to build out their AI infrastructure. I think the quote of the earnings season so far for me has been from Sundar Pichai of Google, saying that the risk of underinvesting dramatically outweighs the risk of overinvesting when it comes to AI infrastructure. Because the risk of underinvesting is that these companies miss out on the biggest technological platform shift for the next 10 to 15 years. Microsoft missed out on the shift to mobile. Alphabet didn't lead it. These companies can't afford to not be in the race. And that's why we're seeing 210 billion or thereof slated in capex from just 4 of Nvidia's largest customers in 2024. Meta, Microsoft, Amazon and Alphabet. That's 60% up year on year.
We're already seeing that risk of underinvesting, to your point, in Apple shares, for example. They're just now getting on that bandwagon. I think the product launch of their first AI phone is September 9th. So we'll see if that's even well received, given the criticism that they have. But one of the criticisms of Nvidia in the last quarter was that so much of their demand is really coming from the handful of names you just laid out. Do you think there's a risk of or lack of diversification that the market is also not appreciating to the downside?
So these large hyperscalers, plus the likes of Tesla, we estimate comprise around 60% or so of Nvidia's revenues. We don't see that revenue going away. That capex number is actually indicated to accelerate into next year. But we are starting to see demand pick up from Nvidia's broader base of customers. This quarter, we've got China demand entering the ring with Nvidia's H20, Alibaba, Tencent, similarly talking a big AI game. And the biggest sort of wild card for demand, we think, actually comes from sovereign governments. This business line was zero for Nvidia last year, but it's going to be high single-digit billions this year, and it's impossible to model, it's impossible to predict because of data sensitivity. But if in June, Nvidia announced that it's going to be entering into 5 Middle Eastern countries for an undisclosed sum, and when we think about the budgets of the hyperscalers, Middle Eastern governments, these are the largest budgets out there.
When is AI going to make money for everybody else other than Nvidia?
So the return on AI infrastructure investment, possibly the most controversial topic of this earnings season so far. There are really 2 reasons why we haven't seen broader and larger returns on AI-related investment returns so far. The first is that these companies are compute constrained. CEOs from big tech all sang from the same hymn sheet this earnings season in saying they don't have enough compute capacity to meet the demand they're seeing for their AI products and services. So they need more and larger scale AI infrastructure in order to unlock more AI revenue generating opportunities. But the second factor is, generative AI introduces a threat of disruption at the software application layer.
Yep.
So if generative AI is driving the marginal cost of coding down to zero, we heard from Andy Jassy tweeting this week that their software developer assistant has saved them something like 4,500 years of developer time. Astonishing statistic. If that remains the case, the key question for enterprises is, do we still buy software, or do we just build our own? Or do we buy from a generative AI startup at a cheap price?
Yep.
And so these two combined reasons means that it takes longer to see value emerge at the application software layer of this new AI stack. That said, pioneers are already seeing meaningful AI-related revenues.
So we're compute constrained. No, we haven't got enough chips. We haven't got enough power. So we need more power. We were talking to one of the utility bosses in Europe recently. He said, forget it for the next 10 years. If you want to hook up anything, basically, to our grid, you've got to wait 10 years for that to happen. And I look at Apple. Like, Kriti brings up Apple. Is there a hardware issue as well in some of the products that we're all going to be using in terms of the handset's ability, the computer's ability, the PC's ability to be able to handle what is happening? It feels like there is all this progress happening and we're building out, but there's so many key bottlenecks that still need to be resolved.
Completely right, guys. So 8% of iPhones at the moment can enable AI. So this means we're going to see a refresh cycle, PCs as well.
How much are consumers going to be prepared to pay that extra cost? An iPhone is an expensive product already. How much more expensive does it need to get in order to deliver on the promise of AI?
I mean, I don't know about you, but I'm pausing buying my new iPhone in order to get a new AI-powered iPhone at the end of this year. But I think that what you first of all see are the refresh cycle of the PCs, the smartphones coming to market. There's not an issue in getting that hardware-related sort of device up to scratch. Whether consumers will pay up for this, I think they do, and actually Alphabet and Meta both pointed to this on their earnings calls. We're seeing adoption in consumer-facing AI-related applications emerge, or the value here emerge faster than enterprise applications, and that makes sense. So if we think about enterprises, there are long purchasing cycles here. We're talking about large spending budgets that have got to be scrutinised, possibly at the board level. But so someone like Meta, who 50% of the content we now see on Instagram is recommended by AI.
That's a big user of Instagram.
Huge.
And we're already seeing AI drive tangible revenues for those types of companies.
I mean, we talked a little bit about the sort of quarter-on-quarter risks to Nvidia. When you think about the longer term, the year-on-year, maybe decade risks to Nvidia, what do you see there? Is it a question of competition, more people coming into the market? Could there be issues in the sort of chip supply chain between the U.S. and China? Where do you appraise the risk there?
The key risk, I think, with Nvidia is there are waves of adoption when it comes to AI. At the moment, we've got the hyperscaler, the communication services companies really spending very big. That point has been well made. From there on out, we have enterprises adopt, and we are starting to see traction emerge there. We're expecting further commentary on that this quarter. Around 2028 or so, we're expecting automotive and robotics to really sort of take over the baton. And as long as we don't see any of these sort of waves delayed by a sort of significant degree, we don't think that Nvidia runs out of a growth engine. And as it goes to sort of competition, we really think we're at a tipping point in platform economics with accelerated computing. So when we think about big technological platform shifts in the past, most recently seen with the mobile, one or two companies tend to capture the platform economics and really dominate this. This happened with Apple. This wasn't for a lack of others trying, but it's now really a foregone conclusion that developers will only write to Apple iOS or Android. Now, a lot of ink has been spilt about whether Nvidia's stranglehold when it comes to CUDA on their software system has been broken by competitors. But what we saw last quarter, despite the likes of AMD introducing their own ROCm software, was that the number of developers residing within Nvidia's CUDA ecosystem actually increased by a more dramatic sum quarter on quarter. We're now up to 5.1 million developers. And this is because of the moat around CUDA is actually Nvidia's install base. It's not the fact that they've got the best software, and they do have that as well. But developers want to write to where there are the largest install base of GPUs and the critical mass of developers.
And you mentioned also that $200 billion worth of CapEx spend from the sort of big tech companies. I'm curious, just because of the way that you framed it, how much of that is FOMO and fear of underinvesting, and how much of that is allocated and specifically they know what they're going to use these chips for, and how much of it is just wanting to reserve it and to hold on to those?
It's specific. These companies are buying every single GPU they can get their hands on, and the way that Nvidia actually allocates its GPUs is based on whether customers are ready to stand up their AI-related infrastructure. A really interesting comment from Meta's CFO on their quarterly earnings call was that their investment in AI-related infrastructure is purposely fungible. So they are investing in NVIDIA infrastructure that can be used either for training or inference. And we think that this is actually possibly the most underappreciated component of NVIDIA's story going into the next 3 to 5 years, NVIDIA's inference opportunity. Because this is, we all know of NVIDIA's dominance in training, but inference is a much newer market. It has the potential to be a lot larger. Once you've trained a model, it's largely trained. Yep. Inference is ongoing. And in Q4 of 2023, for the first time, we learned that 40% of NVIDIA's data center revenues stemmed from training. This number absolutely blew our minds. It was the standout figure, and it remained at that level last quarter. But competitors have been focusing their attention here. AMD, despite trying to make inroads in training, the majority of their deployments today are for inference. So 40% really impressed us. The market wasn't expecting it. We weren't expecting it. And there are distinct reasons why training and inferencing on the same architecture is actually preferable for customers. And so Meta's CFO is saying that we are actually investing in the infrastructure in order to use it for both purposes. Really tested out our thesis here, because you have a cost benefit. You invest once for 2 use cases. You have a performance benefit, the model for inference. You don't have to worry about that running if it's been trained on the same architecture. And you also have the CUDA benefit.
I just want to wrap it up by talking about the ecosystem. What is happening around NVIDIA, because this is kind of one of the key areas that I think a lot of people are now looking at with NVIDIA, where it is. Your note's really interesting about ASML and the fact that we may be transitioning away from lithography, and material science is going to change how we think about how we manufacture chips. Am I long NVIDIA and short ASML at this point in time? How bold a call would that be?
That would be a very bold call, Guy.
Okay.
ASML does still have a monopoly on EUV lithography in any case. But we do think that there is a change in the value capture within the semiconductor manufacturing ecosystem. Because up until now, really, the progress in driving silicon performance has been about making everything smaller, fitting everything onto a chip. And that's lithography, exactly, Moore's law, and that's ASML. But now, because of AI, die sizes are actually becoming larger for the first time, but by a quantum of about 5 times. Everything is going 3D across logic, memory, architectures. We're stacking wafers on top of each other. And these all have to be packaged together, advanced packaging such as TSMC's CoWoS. Now, what this introduces, I mean, the wafer fab equipment market is really split in half between lithography, so ASML, and materials engineering. So this is applied materials, Lam research, ultra-clean technologies. And we think that these players, plus advanced packaging players, which is really an entirely fresh market, growing at sort of 40% CAGR for the next 10 years or so, this introduces a new playing field, and we think that the baton really gets passed to these players in driving silicon performance going forward for the next 10 years.
OK. It's not just all about Nvidia. Feels like it today. Claire, fantastic to see you. Thanks for setting us up so perfectly. Clare Pleydell-Bouverie, fund manager at Liontrust. Thank you very much indeed. Don't forget, we have got some great coverage coming up right here on Bloomberg Television relating to the Nvidia story today. We have an exclusive interview which will be happening a little later on this evening. The CEO, James Huang, is going to be joining Bloomberg TV. The coverage begins at 11:30 p.m. UK time, shortly after the numbers come out. Coming up next, we're going to talk about your stocks to watch. Keep an eye on GSK this morning. A Delaware top court agreeing to hear the drug maker's appeal to end Zantac lawsuits. We'll discuss that next. This is Bloomberg. .20 p.m. Eastern, Nvidia numbers are going to drop. It's the main market event of the day. Is it the only market event of the day? Paul Dobson, executive editor for Asia Markets, joins us now. Paul, is that all we care about? Should it be all we care about?
I think that it's going to matter a great deal for a bunch of reasons, Guy. Not only is it about a 6% weighting in the S&P, which means that it's going to have a big influence on US markets overnight, but because of the way that it sort of interacts and relates with a bunch of other companies right across the world, it's going to matter for global markets as well. You think about how TSMC is the kind of Asia equivalent or Asia proxy. TSMC is 9% of the global emerging markets index, about 6% of the Asia-Pacific index as well. So it's going to matter for us as well as it's going to matter for the US. It's going to matter for Japan. It's going to matter for Korea. It's going to matter for Taiwan. Interestingly, it even seems to have some sort of a positive correlation with things like copper. You know, people thinking through that electrification theme, and therefore the Chilean peso where copper's produced. So it's going to feed into all sorts of global markets, that risk complex as well. If they can match those, yes, lofty expectations. We always talk about that. But if they can deliver, or if the outlook for next year, with all of the potential delays factored in, is still going to look positive enough to convince the market that this is still a growth picture and a growth story, then that could continue to drive the ongoing risk rally that we've been seeing over the past couple of weeks.
Paul, we just had a riveting debate in the commercial break, which is what could potentially overshadow these earnings? What do you think? I mean, war, famine, pestilence, those kinds of things. But I mean, nothing that you would really hope for, Kriti. I think that it, you know, there are a bunch of underlying themes that are also interesting out there at the moment, and one that we've been watching very closely is the idea that as the dollar weakens, all of this cash is flowing into other markets all around the world. It's coming into Asia in a big way. Southeast Asian markets are having a storming time at the moment. Indonesia leading the way, seeing massive inflows, the highest in over a year, into bonds, the highest in 2 years, into equities there this month, pushing the rupiah higher as well. It's fanning into other places. So we see Philippines selling dollar bonds, Indonesia selling 40-year bonds, its longest ever maturity. We've seen people piling into Singapore as well, the biggest bid to cover ratio in a couple of decades. So, you know, everybody's feeding that feel-good factor about the Fed as well. And that, I guess if we have some crazy wild comment from an outlier Fed member, then maybe that would upset things. But otherwise, put all the focus on TSMC.
Right. Well, Paul, we won't hold our breath for that. We've been trying to drag Guy away from Nvidia all morning. We did get some earnings out of the Chinese economy. You know, obviously we need to pay close attention to that. What did we learn from those?
Yeah, let's do it really quickly. Pretty dismal earnings again. Bad news for the richest people in China is their companies that are being the ones that are being hit at the moment. What it really tells us is the consumer is looking weak in China at the moment. There's no demand even for kind of staples or discounted goods. That gives you that sense of gloom and disinflation and price wars that we've been seeing hanging over the economy for a while already.
All right, well, Paul Dobson, Executive Editor for Asia Markets, thank you very much for your time this morning. Let's get the stocks to watch with Joe Easton. Good morning, Joe.
Morning, Ollie. So starting with GlaxoSmithKline, we got yet another ruling on the Zantac cases with that product that's said to be causing cancer, getting a new ruling out in Delaware. The Delaware Supreme Court will now actually review the introduction of expert evidence in these trials. And GlaxoSmithKline saying in a statement that they welcome this as it's something that only happens in exceptional circumstances. And we saw GSK's US listing, the ADR, gaining around 4% in the US yesterday. Potentially we might see a bit of positivity in London today. The stock has actually recovered a lot of the losses that we saw in 2022 when there were going to be potentially billions of payouts for that Zantac product lawsuit. So keep an eye on that one in London. We're also looking at Prudential in London, the Asia-focused insurer, reporting a bit of a decline in some of their headline profit numbers, and as such, the shares are a tad lower in Hong Kong trading. As we can see on the screen, they're down around 2%. Now, there has been a bit of a volume decline driven by the Chinese market, a bit of a slowdown in that region, and also potentially interest rates coming down, weighing on that one. Finally, around town, just a quick one here. We got German real estate firm Around Town reporting a bit of an improvement in some of their valuations. Down the bottom here, devaluation slowing material. That could be a positive for Around Town today.
All right, Joe Easton with our stocks to watch. We thank you so much. Coming up next, it is the opening trades across Europe. You are seeing futures pointing higher. We're going to dive into the details next. Stick with us. This is Bloomberg.
Wednesday the 28th, welcome to Nvidia Day. It is the main event. Nothing else really matters. Yesterday was really dull. Nothing happened yesterday. Take a look at the volume figures for yesterday. Really, really anemic. Everybody's either on holiday or waiting for Nvidia. That seems to be the trade right now. We saw a little tick higher after Europe had closed in the US, but I'm not really sure that that's actually a signal in terms of where the price action is going to take us today. It all happens a little bit later. We'll be waking up to it tomorrow morning. Ollie, what are futures telling us? Yeah, well, the futures are telling us something. The Eurostoxx 50 yesterday did close just about dead flat. We're catching a bid this morning, about a fifth of 1 percentage point up this morning. The FTSE 100 did all of its catching up yesterday. Again, we're seeing a similar story there, up about 15 points. S&P futures, once again, dead flat, Guy, as you're saying, really in wait-and-see mode. As you said yesterday, the lowest volume, second lowest volume of trading in all of this year. It traded about 60 billion. A daily average, Nvidia trades about 40 billion. So that really tells you the story today, Kriti. Yes, yesterday was Christmas Day, Kriti. I can't with your comparisons here. We talked about Santa yesterday. We talked about Nvidia Day today. We're going to get some more jazzy names into the mix, but we're also going to be talking about the read-through from Nvidia into ASML. What kind of precursor do we see perhaps in some of the tech stocks today? We saw a little bit of a sell-off in the tech sector yesterday as well. Novartis is also one that we're keeping an eye on. It looks like they've met a specific endpoint. We'll see that whether or not that shows up in the stock as well. GSK, Joe Easton was talking about this earlier. This is an appeal that the judge over in Delaware has agreed to hear around their Zantac drug. This is something that was accused of cancerous effects as well. This is also something that's been influencing the stock on both sides of the Atlantic. So we're going to keep you apprised of what that looks like at the open. Guy. Okay, here we go. It is time for the open. Drum roll. It's going to be exciting. Tomorrow morning is going to be exciting. This morning, I'm not entirely convinced, but it is time for the opening trade. Yesterday was light volume. We are waiting for Nvidia, 4:20 p.m. Eastern time. That's kind of 9 o'clock our time. We're going to wait for those Nvidia numbers to drop. This morning, therefore, I don't think you're going to see much in the way of action. I'll be interested to see what the volume numbers look like today in terms of comparisons with yesterday. So here we go. FTSE's up by 1/10 of 1%. Stock 600 is up by 1/10 of 1%. Everybody else is still snoozing, waiting for these markets to open. We'll see what happens, but I don't expect you're going to see much at an index level. Single stock stories. I think that GSK story is interesting. It's going to be interesting to see maybe there's some positioning in some of the tech stocks in advance of Nvidia, but it looks like thus far we are seeing a fairly quiet open, Ollie.
Yeah, well, Guy, give us a chance here if we can. So let's look at the sectors and what's going on this morning. I mean, basically everything is up this morning. It's being led by media, technology, up about 0.4%, financial services, all of that is up. We actually only have two categories that are losing this morning. It's retail and basic resources. Picking up from yesterday where we saw the sort of consumer goods and travel and leisure really do well yesterday. And this morning, it's really media, technology, financial services. Those are the sectors that are in the green today. Only two sectors in the red, retail and basic resources.
But when we talk about the GSK story, you're already seeing it be your biggest index contributor to the upside, and that, of course, higher by about 2.5%, making up about 43% of the move to the upside you're seeing in the FTSE 100. It's also your biggest index mover in the stock 600 as well, so that is significant. ING is going to be another one, higher by about 1% as well. It's interesting that we're seeing SAP up on your top 50 performers. Again, we're still about 90 seconds into the open, so not that much shaking out. But remember, ASML and SAP were one of your biggest weights on the index yesterday, so perhaps a little bit of a rebound shaking out there.
It's interesting that Novo's down today, so I wonder if there's a portfolio effect. People are taking money out of Novo and put it in GSK this morning.
Yeah. Well, I'm also going to add, speaking of biotech and pharma and all that, the healthcare space, Novartis as well is one that we're keeping an eye on because they met their one of their endpoint targets as well. It was at least in the pre-market trade, or pre-market indications showing a pretty big move. It looks like it's higher by about 0.5% there. So there's a lot going on in the biotech space.
I'm just waiting for my AVAT to load up to see exactly what the volume looks like on Christmas Day. Maybe the day after Christmas Day.
You're doing this to annoy me. I know you are.
Of course I am.
I know you are. I know you are. And I'm just going to stop responding.
Do you want to call it Nvidia Day or do you want to call it Christmas Day? It's either one or the other.
They're horrible. They're both. We're going to work on our branding.
We could call it Wednesday.
Let's call it Wednesday. It's riveting enough. But of course, to Guy's point, it is, dare I say, Nvidia Day. It's what everyone's watching from a micro and macro perspective. We were just talking to Clare Pleydell-Bouverie on the impact, on the ripple effects of the story. Take a listen to what she had to say.
The risk of underinvesting is that these companies miss out on the biggest technological platform shift for the next 10 to 15 years. Microsoft missed out on the shift to mobile. Alphabet didn't lead it. These companies can't afford to not be in the race. And that's why we're seeing 210 billion or thereof slated in capex from just 4 of Nvidia's largest customers.
Clare Pleydell-Bouverie, fund manager over at Liontrust, joining the program earlier on why companies cannot afford to miss out on the shift to AI. So that momentum squeeze, it feels like, that's been driving the market, partially in addition to the fundamentals. Let's get another take here. Lucy Baldwin, global head of research over at Citi, joins us around the table this morning. Good morning. Okay, so it's Nvidia Day. I guess I have to say that. Fine. I'd argue tomorrow's Nvidia Day, but whatever. Talk to us, though, about this shift to the upside. There's so much pressure around getting involved, even though it's still kind of unclear what the return and what the timeline of that return looks like. In your view, how do you play that uncertainty?
Yeah, good morning. As you say, it does feel like it's Nvidia Day. It's sort of move over, pal. It's Jensen's turn to move some markets. And
call it Jensen Day.
Yeah.
Cool. I'm up for that.
No, and I think it's, all eyes, as you say, are on it from macro to micro, right? And I think when you think about what's happened in the first half of the year, I mean, I know it's been a wild ride for markets, but, if you look at the performance that we saw in the S&P, broadly speaking, you had 5% of the 15% up coming from Nvidia. You had 5% from the rest of the Mag 7, and then the other 5% from the other 493 names, right? And so investors have to get this right from a tech AI perspective when it comes to the US market. And I think when you look at, say, the second quarter results that we've just gone through, right, it was amazing to see the Mag 7 delivering 38% earnings growth and the other 493 names delivering 5%. I know, obviously, we've got the big one today, but that's where we're standing at the moment. And that 5% relative to that 38% growth doesn't sound very exciting, but when you look under the hood, that's the first quarter for more than 6 quarters now of actually seeing that cohort actually positively inflect, right? We've had all these rolling earnings recessions going on across the US market.
Yeah.
So it's been an awful lot to grapple with. So, when we look to the end of this year, we've still got our 5,600 target for the S&P. And I think, when you've got valuation levels 22, 23 times in that zone that we've now kind of gone back to, an awful lot does have to happen. So there's a lot of pressure now really on the Fed for this easing cycle. And it's now obviously no longer a question of if, but it's a question of when it starts, how big is it, how many cuts do we get this year, how many do we get next year. And obviously, expectations there have shifted a huge amount during the course of this year.
Well, if we get, let's say, and stick with me here, a little bit of domino effect. If we get, say, an A+ report from Nvidia today and followed by perhaps the ripple effects you're going to see in the rest of the stock market, not just your hyperscalers, but around the world, that's going to show up in financial conditions. That's also a case for Jay Powell to potentially hold. And yet you're talking about a potential 50 basis point cut there. How does he, or how does the Federal Reserve really compute the ripple effects of what happens in the stock market via financial conditions?
Yeah, and I think when you look at what we're forecasting, because as you say, we've got an expectation that we could get this supersized 50 basis point cut in September. We've also got a second 50 basis point cut expected this year. And so we're looking for 125 basis points of cuts between now and the end of the year, which is a little bit more than the market is currently pricing in. That's really predicated on what's going on in the labour market. So all eyes are on that, right? So the other big day, other than Nvidia Day, is going to be non-farm payroll days next Friday, right, on the 6th of September. And that's going to be a really crucial event, I think, for markets if we're going to make new highs, right? And
it's whizzed right over the PCE on Friday. Does that not matter?
Yeah, look, I think in terms of the really two big events, it's going to be that non-farm payroll print after what we saw with the July data. That August data is going to be critical to understand what's happening in the labour market. And again, I think the rise in the unemployment rate that we've seen thus far has really been a function of what's going on from a supply perspective. You've had that growth in supply of the labour market. It's not really been a function of people being laid off yet. And I think that is where our nervousness comes, is that you're starting to see in the US pockets of that weakness spread out, which of course were the worries that we saw over summer, right, after the July print. And we don't think it was a sort of one-off thing. We think there's going to be more pressure there. And I think it's a really delicate balance for equity markets because obviously if we get the 50 basis points that we're calling for, it's going to be on the back of having had some pretty weak data between now and that September date of the cut. And so, that is a risk to equity markets at these levels, for sure. Yeah. And I think you've got to think broader about, as you say, that transmission mechanism. It's for us, for example, it's why we like certain parts of the equity market as well as big tech. We think there's an opportunity here to start to lean into those really interest rate sensitive sectors of the market, such as REITs or real estate, such as financials and parts of consumer.
OK, two things come out of that for me. Let's talk about the data, first of all. Do risk assets rise or fall if we get a big beat on the payroll number? Because there's a chance of a bounce back off the hurricane-affected last number.
Yeah, look, I think you've got the sort of, if you like, the Goldilocks scenario, the path which is that actually you get reasonably good jobs data, right? Unemployment rate broadly stable, and then you can get the 25 still coming through, and you can still probably get a fair few number of 25 cuts this year. That, I think, can keep markets going. And again, going back to the fundamentals, right? There's a lot of expectation on next year's earnings growth that we've got to start to think about.
OK, but if we get 50, is that a warning signal I should sell risk? Or if we get 50, is that a good thing and I should buy risk?
I think short term, if you get 50, there's going to be a huge focus on the downside risk, actually.
OK, so that's kind of that's kind of what we saw at the beginning of August. Bad number, market sell-off. The second question is just coming back to Nvidia, because it is Nvidia Day,
or Jensen Day.
We can call it Jensen Day. I think Nvidia Day works. Yeah, I think we're splitting hairs here. If I don't have a lot of Nvidia in my portfolio, am I going to underperform going forward? Because that's been the story so far this year. Yeah. Does that continue throughout the rest of this year and into next year?
Yeah, and Guy, that leads into this sort of broadening thesis and debate, right, which we and others have been grappling with, right? So although we are fans of big tech, and I don't think people can afford not to hold them, and certainly when we had the pullback, we were advocates of coming in and picking up some of that high-quality growth, right, which is in that sector. And we argue that growth is actually quite defensive now.
Yeah.
I think that broader question of when does the rest of the index start to perform, or when do the smaller mid-cap names start to perform, is quite a tricky one. If you look at consensus expectations, people are actually assuming you get more of a sort of narrowing in that growth differential for next year, which is quite interesting. And if that's right, and it's a really big if, given how small and mid-cap names have tended to perform, but if it's right, then there is real legs to that thesis of that.
But if the rest catch up, does the index go down?
Our view is that you've still got room for the upside for the index next level, right? I don't think as you go into next year, at 23 times earnings, I think it's really hard to argue for more multiple expansion here. We're looking for 8% earnings growth. So it's more like a steady as she goes in that scenario of a fairly soft landing. We haven't talked about the election, but a fairly soft landing and the AI boom continuing to have some legs. And as you say, all eyes on any messaging around how that looks from Nvidia later on today.
Yeah, and we're right basically on your S&P end-of-year forecast today, basically, right? It sounds like you're comfortable there, more or less. I guess I'd like to understand for you, what is the biggest threat to that? Is it the U.S. election? What is going to make you reprice that?
Yeah, I think there's a whole host of threats out there to that, exactly to your point, right? And I think one is the recession risk. So we're already a little nervous about that with our chief US economist calling for a technical recession this year, albeit a mild one. And I don't think the market could take a super meaningful downturn. And there's some definite short-term risk around what a 50 basis point cut is really signalling. But I think when you look at the fundamental earnings expectations, that's critical because, again, going back to what we've just seen, the Mag 7 have managed to see earnings upgrades for the second half of this year, right, which is pretty impressive, and in contrast to the other 493 names. So if you have a scenario where that earnings growth continues to pick up and surprises to the upside next year, then that's very encouraging. And, of course, there's the odd data point that is out there supporting that, in contrast to what I said, and that would be things like some of the consumer confidence data that's coming through on the expectation of the rate cuts and on the expectation that inflation is now very under control.
Right, and I want to drag us away from the United States and into Europe, because we also have inflation data coming out of Europe this week, which apparently no one cares about, right?
We'll care about it tomorrow.
Yeah.
Actually, maybe not tomorrow, maybe the next day.
Eventually.
We'll wait and see when you care about that. But what is your sort of case for investing in Europe? Because we spoke to Dan Scott a little bit earlier, who's sounding kind of bullish on Europe, saying there's a lot of negativity priced in. Where do you see things?
We're a little different to that. So we would prefer the US market over Europe here. So we relatively recently downgraded our view on European equities. And, you know, a lot of that relates to that lackluster growth backdrop that we're seeing in Europe. Obviously, within there, you know, there are opportunities, of course there are, but in aggregate, we would prefer to be invested in the US market relative to the European market at these levels.
Fair enough.
OK, we're going to leave it there. Nice to see you. Thanks for stopping by to see us. We really appreciate it on Nvidia Day. Lucy Baldwin, Global Head of Research at Citi, thank you very much indeed. It's time for a quick look at the Core 6. This is what the major stocks here in Europe are doing. We've talked about the Mag 7 in the States. Let's talk about the Core 6 here in Europe. Ferrari is unch, which is a little surprising, not in the red or in the green. Nova's down a little bit. I wonder if that's GSK. Everywhere else, I think you're basically seeing a market that is flatlining. ASML is maybe one of the names that you want to keep your eye on as we work our way towards those Nvidia numbers a little bit later on today. There we go. I mentioned it again. Joe, what do you got? What are we watching? A healthcare sector, probably on Joe's radar this morning.
Absolutely. So healthcare is on the radar. We're watching GSK, only a gain of actually 1.3% at the moment. We saw the ADRs in the US up around 4%. We haven't quite seen the same reaction in the UK. Remember now, this is coming after the Delaware Supreme Court ruled that it will take a look at the expert evidence used in those Zantac cases. GSK potentially looking at billions of payouts. But that stock has really recovered over the past year or so, given there were some positive updates on those trials. So only a gain around 1.2%. We've also got Prudential. Now, this one over in insurance in Hong Kong. The share slipped as well. They have reported a bit of weakness in some of their Chinese and Hong Kong markets as well, seeing a bit of a decline in the interest payments as well, given the declining rates there. So that one going the other way, but two decent movers on the FTSE 100 today. Then, speaking of the FTSE 100, we'll check in on a couple of mining stocks because we have seen the first decline in iron ore futures in 4 days now, so we are seeing some miners, including Rio and Anglo, slipping a bit. They had a decent bounce over the past couple of days, but starting to come back down again for those mining stocks. Then over in real estate, lots keeping us busy today, keeping us on our toes. SBB, once again, there's no chance I'm going to try and say that full word, so I will just call it SBB. We're gaining 1%. They've reported that they're going to do some more cost cutting, something they've said already that they were looking at, confirming that today. Around town, they've been talking about an improvement in German real estate, but we're not seeing a reaction there. They are still in a loss. They reported a net loss for the half year. So that weighing on that stock. And Leg Immobilien, also over in Germany, doing a massive convertible bond sale, and that will be dilutive for shareholders, of course. So that's one to keep an eye on. One that wasn't on our radar, we're going to go back into healthcare. We're looking at Elekta. Now, this is in Sweden. It's also oncology, similar to Astra, GlaxoSmithKline, companies like that, reporting really strong orders, according to them, out of the statement, up 8%. That's the best performer on the stock 600 this morning. Then a couple of morning calls to bring you. Firstly, we're going to take a look at Arcelor. This one goes up to buy at Deutsche Bank. They reckon the decline linked to the Chinese real estate market and the decline in steel is actually overdone, and they say that is a stock that now has value. So we're up 1.3% on that one. And finally, back in the UK, we've got Direct Line. This one positive as well. We get Citi upgrading it to buy. They say concerns about the UK motor insurance market are overdone. The market overestimates that. Direct Line rising 1.2% as Citi upgrades to buy this morning.
All right, Joe Easton from our equities team, we thank you so much for bringing us some of those early movers. Coming up on the program, Ryanair faces a winter of airfare decline and Boeing production challenges. We're going to hear from the CEO, Michael O'Leary, next. But it's not just Ryanair that's been impacted by those delays over at Boeing. Here's what the CEO of Africa's largest carrier, Ethiopian Airlines, had to say.
We didn't want to wait for Boeing to deliver the ordered airplanes. And now we are leasing airplanes from the lease market. According to the current agreement, we will be receiving 4 MAX airplanes starting in November.
Welcome back to the opening trade. We are 20 minutes and 45 seconds into the session this morning. You can see Eurostoxx trading up 1/8 of 1%, I should say. They're really green on the screen across the board there, except for, I guess that's the FTSE there. It's a little far away, yeah, 'cause it's basically dead flat after a day of catch-up there in the markets on Monday when they were closed for the bank holiday. But a little bit higher. Stocks in Europe catching a bid ahead of, yes, Guy, the main event today, Nvidia Day.
Jensen Day.
Jensen Day, Christmas Day. Let's call it what you want. European stocks have been climbing, though, over the last few days, which is actually interesting. One of the stocks that stood out yesterday, Ryanair, having a really solid session.
Absolutely.
So O'Leary's in town, MOL, Michael O'Leary. Had to go and talk to him. So I managed to find him, track him down in Victoria. He's basically, he had a press conference in Brussels earlier on, which actually was what moved the stock. And then he had a press conference in London. He went from one to the other. I think there was a bit of an air traffic delay between the two, but we'll talk about... Yeah, that's part of his shtick at the moment. In terms of the fare outlook, the stock moved quite a lot earlier on this year. In fact, it's moved on a number of occasions as he's basically downgraded fare expectations throughout this summer. He's now pointing to the idea that actually you're probably going to need to have promotions as well over the winter to continue to attract flyers. We're starting to see basically a position where consumers are beginning to struggle a little bit. Interest rates are a factor in that. Other factors then there as well. And therefore, he needs to stimulate demand. So this is Europe's biggest discount carrier, basically saying we're going to have a series of sales. Well, he certainly already announced one in order to drive demand. He's saying that maybe, this is not guidance, it's a best estimate that he's going to see maybe a 5% decline in fares over the winter. As I say, I caught up with him yesterday. This is what he had to say.
Pricing is still down, fares are getting cheaper, but the decline has levelled off. And I think that's reasonably good news for our shareholders.
What does the winter look like?
Too early to say. You know, we will have about 8% capacity growth this winter. I think pricing, I think it's reasonable to believe pricing will continue to be down, but I think maybe down. I mean, I think down 5% is my best guess at this stage. But, you know, every time I come up with a guess, somebody thinks it's a forecast. The pricing will be whatever the pricing will be. We will fill our flights. We've launched 4 new routes this morning from Stansted this winter, 7 new routes from London in general. So new routes, winter sun.
But you're having to stimulate demand with
we expect
sales.
We'll continue to have to stimulate demand. But I think that's good. I mean, we've come off 2 years where prices went up by 20%.
Yep.
So having to stimulate a bit of demand now, I think, is good for consumers and it's good for the industry generally.
Are costs falling faster than fares?
Our costs are falling at the same rate as fares. We're taking new aircraft from Boeing. They're burning less fuel, less CO2 emissions. There's more we'd like the new government to do. We think Labour should scrap APD. Yep. It's a government that's committed to growth, and nothing would deliver growth in the UK economy faster than scrapping APD, which is a tax on air travel. The UK is an island on the periphery of Europe. It doesn't need to be taxing air travel. It needs to encourage it.
We'll come on to tax breaks in just a moment. Let's talk about Boeing for a second. Yep. Have you spoken to Kelly yet? Kelly Ortberg, new CEO?
No, I speak to Stephanie Pope on a weekly basis. I think she's making some progress, but the progress has been disappointing. We hope to get 7 aircraft in July. They only delivered us 5. We were then supposed to get 10 aircraft in August. We only got 3. So it's still...
What's the problem?
The problem is they're still having production issues, challenges in Seattle. The supply chain is still challenged. Both Airbus and Boeing are struggling to get their monthly production rates up. But we think and hope that it will improve during the winter when they're under less pressure from aircraft for deliveries in the run-up to the peak summer period. The critical person for me and Boeing at the moment is Stephanie Pope, because she's the one sitting in Seattle trying to fix the production issues. And I think so far, despite some additional delays, she's done a reasonably good job.
Are you confident this is going to get your MAX 10s on time?
I'm not confident we'll get them on time.
They're going to get certified? When do you think that's going to happen?
I think they will get certified. I mean, Boeing tell me they'll get certified in 2025. As long as that doesn't slip, then our first deliveries are due in the spring of 2027, and I see no reason at this stage why that will slip. But clearly, Boeing have to start getting their production numbers up on a monthly basis and not have any more screw-ups like they've had in the last couple of years.
Do lower interest rates stimulate air demand?
I think no, but lower interest rates would stimulate a bit more consumer confidence, a bit more consumer spending. There's no doubt that higher interest rates this summer have depressed consumer spending. That's why we blame, while we're carrying more passengers this year, people are paying lower airfares. There is some price resistance out there, and we think lower interest rates would ease that into summer of 25 and summer 26.
Ryanair CEO Michael O'Leary talking about the demand story and what he's ticked off about. He's ticked off about a lot of things right now. He's ticked off about Boeing and the fact that he's not getting his aeroplanes on time and the schedule is slipping. He's ticked off about taxes. What he's really ticked off about as well is air traffic control delays this summer, which have been epic. And last year we were dealing with strikes, French ATC strikes. This year it's just been a lack of staffing, he argues, at critical times during the flying day that have basically caused huge delays for a lot of people flying on his airline, other airlines. He says one of the key jobs of the Commission when it comes is to fix that. That has got to be a priority for Ursula von der Leyen, though he's pretty he's not anticipating a great deal on that front.
I don't think those are some high hopes coming out of Brussels. I thought that last bit of the sound was quite interesting, where he said that interest rates could help spur that demand, which makes sense, but I didn't realize it would show up that quickly in airfare, because it's also a point that Jeff Curry over at Carlyle had made, the former head of commodities over there.
Yeah, I find it interesting. Also, what can we read from the macro there? Ryanair down 18% this year. Lufthansa down about 30%. So, you know, maybe the consumer is shifting a little bit. Anyway, coming up next, the National Security Advisor Jake Sullivan and top China diplomat Wang Yi have had meetings to try to steady ties. That'll be next. This is Bloomberg.
Over the past few years, bilateral relations have gone through twists and turns. The key is to keep the overall direction of mutual respect, peaceful coexistence, and a win-win cooperation. Implementing the common understanding between our two presidents as their San Francisco meeting is our important responsibility.
President Biden has been very clear in his conversations with President Xi that he is committed to managing this important relationship responsibly.
That from Jake Sullivan, and who is in Beijing right now, meeting with Wang Yi, the Chinese foreign minister. Perhaps not the most exuberant sort of press conference, but certainly a good sign that these two are talking at a time when tensions are very high between the United States and China, as well as with Europe and China, and that is being expressed in terms of trade, tariffs, and all those sorts of barriers. So we thought we'd take a look at the EU trade relationship with China over the last decade and what a difference a decade makes in terms of trade. When we look at the exports to China in Europe, it was about $135 billion in 2013. And the imports were about, $250 billion. Fast forward 10 years, and you see that the exports have grown, relatively into China from the Europe, but it's still below what the imports were. And you look at this number here in terms of what Europe is importing from China. It is absolutely huge. It's €500 billion annually. This is the sort of imbalance that many of the sort of people in Europe are concerned with. Same with the United States. It's exactly what you're talking about. In terms of what is most traded, in terms of what the Europeans export most to China, I think we have the next board on that. It's mostly cars, right? And these are not EVs. These are the big engine cars. They're coming mostly from Germany. And this is the big concern for many here in Europe, that China could target them next. You also have medical goods and machinery. These are sort of the big sort of categories. When you look at the actual trade balance, though, this is still all deficit in terms of China. China still sells more of each of these categories to Europe. And when you look at the countries that are most exposed, you will not be surprised to learn that Germany is absolutely number one. About 100 billion euros worth of stuff is exported from Germany into China every year. And then you have France and the Netherlands sort of coming up behind there at about 20 billion. And then it really drops off after that. So this is the trade relationship that is in focus here. And the U.S. National Security Advisor Jake Sullivan right now is in Beijing as tensions between the two nations rise. It is the first visit by an official of his rank in 8 years since 2016 in the backdrop of the upcoming election in the United States, the struggling Chinese economy, and of course that's sort of all being expressed in escalating tariffs. So we're joining us now. We're very pleased to be joined by Elizabeth Ingleson, Assistant Professor of International History at the London School of Economics. So I'd like for you to just place us in the context of where we are right now with the U.S.-China relationship, and how significant is it that Jake Sullivan is in Beijing right now?
Hi, it's lovely to be here. I mean, the context that we're in, as you've outlined, is extraordinarily fraught. And the larger picture is, as you're pointing out, a huge amount in terms of trade, in terms of international politics at stake. And so these back-channel conversations that have been going on now for since early 2023 are really crucial for allowing leaders in both countries, both the United States and China, to speak with candor. I think it's really important to recognize the role of back-channel conversations and candor in allowing for the larger bilateral relationship to unfold. So at the moment, this is a really important part of the larger picture of US-China relations.
And trying to plug Europe into that, because I think for many Chinese companies, and many of the ones that I have spoken to, had really hoped that sort of Europe would play a more diplomatic role, would take sort of less of a sort of partisan side with the United States. They were hoping to sell into the market here. You have not seen that materialize. Where do you think that Europe wants to position itself in this debate, in this discussion?
Right. Well, I think this is exactly the point, Oliver. You really hit the nail on the head. What this is showing is that the United States is leading in the capacity to balance both what it sees as a competition with China on the one hand, and a capacity to continue the diplomacy and the conversation, and in fact, recognizing the importance of those conversations and of diplomacy, particularly as competition ratchets up. And I think this is a real lesson for Europe, particularly, as you say, Germany, but more broadly, the EU and other countries. I think the UK has a very significant role to play, too, in recognizing that engagement with China doesn't have to mean a singular sort of definition, but it means sort of balancing diplomacy plus other aspects. If you want to continue the competition, which is sort of certainly baked into the relationship right now, that doesn't negate conversation and diplomacy as well. And we're really seeing the United States push ahead on that in the current context.
The current context. The context is about to change, though, isn't it? Post-November.
Yeah.
We've just got used to the current paradigm, and then it's going to shift. Isn't that the problem here?
Well, I think that's exactly why this trip is so important. And, you know, there's a lot of talk about the extent to which this back-channel conversation is going to lead to a final Xi-Biden summit. I think from Biden's perspective, that would be extraordinarily important, partly because he would otherwise be the only president since President Carter in the late 1970s who hasn't traveled to China as a president. And so there is a real, I think, significance to sort of what might come from this back-channel diplomacy in terms of larger summits. But in terms of the transition and what happens in November, what this conversation and these series of closed-door conversations are about is stressing the importance of continuity of communication. There's certainly a lot. Last time Sullivan and Wang Yi met, it was almost certain that Joe Biden was going to be the Democratic presidential nominee, and so we're sort of certainly in a very different space right now. But the message is one of keeping the relationship stable.
Okay, so if the objective here is to make sure that the back channel persists, what else can be done? How much policy can be preserved out of the current administration into the next administration, regardless of who wins?
Well, I mean, this is the million-dollar question, isn't it? I think we can guess at depending on whether it's Trump or Harris. If we look at Trump's advisors and the people around him, all of whom at the moment look like men, we know that there is, and Trump has said, he has a very punitive approach towards China and towards trade. We can absolutely be sure that trade relations are going to become more and more acrimonious. Trump is speaking of 100% tariffs. Under a Harris administration, again, these are questions that are unclear at the moment. Her current advisors are not experts in China or Asia. There is certainly a large amount of sort of question marks there, but I think if it were a Harris presidency, we would see far more continuity than change between the Biden and the Harris administrations.
Elizabeth, walk us through kind of the nitty-gritty here. I mean, I know we're talking about tariffs, regardless really of what administration takes over from Joe Biden in January, but what does that actually look like? Are we still talking about targets and tariffs and purchasing requirements in the agricultural space? Is there going to be more of a focus on tech? Can you walk us through kind of the sector-by-sector read-through or breakdown of what might see the most pain?
Yeah, I think at the moment we're getting indications of, it's certainly from the Biden administration, of what's particularly of concern, right? So electric vehicles have been on the cards for a number of years now. That is very clear. The sort of advanced high-tech chips are increasingly being targeted. We're seeing with Biden's new sanctions on goods going to Russia, the larger way in which international trade, not just sort of bilateral trade, is being used to sort of marry multiple foreign policy objectives at once. So with the Russian sanctions, that is obviously related to the war in Ukraine, but it also has flow-on effects on China as well. And so I think what you're going to see more and more is the interconnections of these international trades. One example that I think, if I may, that's particularly interesting is the way that the EU has regulated its electric vehicles more broadly from China versus its regulations on electric vehicles coming from Tesla. So that's a really interesting example in which the Tesla cars made in China are being taxed at a tariff much lower than the larger Chinese-owned companies entering the EU. And so that is raising really interesting questions about the nationalism behind a company. And so even though a Tesla car made in China is, it's a Chinese-made good, it is being treated differently. And I think we may see more of that kind of nuance and finesse in terms of corporations and companies themselves going forward.
Yeah. It's certainly one we're going to keep an eye on. The other piece of it, and you kind of hit on this briefly, is the other kind of financial mechanisms, the financial levers that China can pull. And I'm specifically talking about the use of the yuan in terms of reserve currencies, Chinese buying of treasuries, among others, or even kind of buying more goods from the likes of Russia or India or other parts of the world, as opposed to from the United States when it comes to exports. How much kind of truth, how much concern is there really in that China can pull back on some of the spending that the U.S. depends upon from a financial perspective?
Yeah, this has been an issue that's been going on for a number of years, and it's certainly been something that's being speculated about for even longer. And I think there is a short-term hurt that comes from this for certain spaces, but at the moment, the long-term picture, to me, doesn't seem to be a particularly significant challenge to the US dollar. I think there would have to be a much larger global shift in order for that impact to really hit the United States. It's certainly hurting in the short term, but the long-term picture at the moment still doesn't seem to be any particularly structural change. And that may, I think where the change may occur is if the structural changes of international trade more broadly and the ways in which supply chains operate, if they do become far more bifurcated, if it becomes a world system in which you have a really clear divide closer to what we had during the Cold War, then that kind of role of the US dollar versus the yuan or Bitcoin for that matter, or sort of other forms of currencies, they may actually start to really hurt. At the moment, we're still living in a globalized world, and that is perhaps shifting, but it hasn't happened yet.
And I want to ask you more broadly about the U.S.'s sort of strategy vis-a-vis China, which the Chinese will call basically a strategy of containment, and they've said so for a very long time. I was also speaking to some senior executives at a very large Chinese company who said that there is this sort of joke in China, where particularly that began with Trump. That was they referred to him as Chuan Jiangguo. You'll probably forgive me for that, but it means Trump, the builder of nations, in the sense that as the U.S. tries to isolate China or tries to block it on certain things, it has to sort of domestically build out all of this production in terms of chips, in terms of all of these other sectors. Do you think that there is a part of this U.S. strategy that could really backfire in the long term?
Look, that's a really, it's a long-held position of nations, including China, who have said over the years, look, your sanctions, all they're doing is helping us sort of rebuild our country or strengthen our country. Mao used to say this quite repeatedly during the 1950s and 60s when the United States had sanctions on China as well. And the history of China shows that this was not the case, that the sanctions that the United States placed on China, much more strict than they are today, completely no trade, that they did not help China's economy. And so I think there is a lot of sort of conversation and bluff around this, but there are also, of course, kernels of truth. And we are living in a very different global world and global system compared to what it was in the 1950s and 60s. And where I think we are seeing some real strengths is China's capacity to develop its renewable energy, its green energy, in a way that is self-sustaining, that's not reliant on the international community and global supply chains in quite the same way as other aspects of its economy still are.
Elizabeth, great to catch up. Thanks for the insight and the input. We really appreciate it. Elizabeth Ingleson, Assistant Professor of International History at the London School of Economics. Let's turn our attention to what is happening in Europe today. The UK Prime Minister Keir Starmer is in Germany. He's got another meeting with the Chancellor, Olaf Scholz. He's aiming to advance, of course, talks on cooperation deals covering everything from security to technology to clean energy. Negotiations, though, unlikely to be completed before next year, and on an agreement surrounding defence, we may get something a little bit sooner, maybe in the next few months. I got excited about this meeting this morning, and then I realised they've already met like 4 times. Yeah. Is this the 5th time they've met since he became Prime Minister?
Something like that, yeah. Most recently, I think it was, maybe it was NATO or the EPC.
When were you at Blenheim?
Blenheim, yeah, that was, I don't even remember, it's like a month ago.
Distant memory.
Yeah, exactly. But it was, that was quite an event. And again, nothing concrete came of it, nothing concrete was supposed to, but really it was, for Keir Starmer, I think, a very significant event in trying to get in front of all of these leaders at the same time, really begin those conversations and build those personal relationships to try to push things through and really sort of establish the tone and the conversation between the United Kingdom and the rest of Europe, particularly post 14 years of Tories and Brexit and all the rest.
Well, I think it's interesting that I think when so much of this coverage comes, it's kind of what does Starmer want from the EU, but there's also plenty that they want from the UK as well, including things like I think there's a mobility scheme that's been in the works. There's a
he keeps pushing that. He keeps pushing that to the side, though. He keeps saying he's not going to do that. He's clearly still worried about the Brexit camp here in the UK and not antagonising it too much.
But I don't think that's a message that maybe Germany's receiving, right? Because they keep pushing this forward, that this is top on their agenda.
Yeah, but again, how much of it is PR? How much of it is just sort of trying to lay the groundwork? And again, I think you posed a very valid question. Have attitudes in the United Kingdom really substantially changed materially post-Brexit in terms of the relationship that the UK wants with Europe? I don't know that that's very clear. And, of course, you need to have this sort of mandate to do something material on that, which I don't know that he has.
I think the problem is that the Venn diagram overlaps with the immigration debate.
Right.
And the free movement of people and that story and how that's going to evolve here in the UK. Immigration, as everywhere it is in Europe, is a huge issue. if you introduce more free movement of people, do you get an input of people into the UK, which further complicates matters? I don't know.
Yeah.
But it does feel as if the Starmer government is increasingly aware of the limitations that is going to pose.
The immigration piece is so interesting because when you look at some of the, I'm bringing it right back to the economics here. We talk so much about the fiscal and the fiscal spend that's shown up in the periphery that's been pushing it. In some of the countries, it's actually been immigration that's been pushing it as well. The fact that they do have this labor market influx is actually helping grow, and that's something you see in the States.
I was about to say that's been really represented in the States.
Yeah, you see it in the Netherlands, you see it in Spain here. I think you see it. There's a little bit in Portugal and Italy as well in terms of kind of that migration.
But you look at the Netherlands, huge debate there on immigration.
Right. ASML is a big part of that.
Well, look at what's happened with the government and the government formation. That has been such a struggle around that issue of immigration.
And it may be the top sort of conversation going into these elections in Germany this weekend on Sunday, where you get votes in two regions where the far right and the far left both are united on one point, and that's anti-immigration.
Well, a topic here in Europe, a topic over here in the States, which brings us to another story that we're monitoring on the other side of the Atlantic. The special counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Now, special counsel Jack Smith has updated his indictment after the Supreme Court ruled Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee saying the new indictment should be dismissed immediately. This is a really big deal from a voter standpoint because some of the independents that were leaning towards the right, perhaps, have actually polled as more sensitive to these criminal indictments. So when you see the fact that this is now re-upped after that immunity agreement coming out of the Supreme Court, this is a big deal that people could actually vote on. And I think it's not just the only story coming out of the states in the space as well. We have a debate. We have a CNN interview coming up tomorrow. Kamala Harris and Tim Walz, their very first joint interview to the press. This is a big deal.
They've resisted so far.
Yeah.
I keep policy lights. Don't take risks around policy. I think it's been one of the key messages coming out of that camp. You don't know what's happening below the surface in terms of policy formation. It's obviously happening relatively quickly. But that CNN interview could be one of the first opportunities really to get an idea of actually some of the granularity that we're watching.
Yeah, and you wonder how much of that could potentially be obviously a downside risk to them. Because
Precisely.
the only sort of things that they did put out, the population did not react excessively positively to the Kamala's economic plan.
And we might get some just early polling coming off of that. Remember, the next debate happens September 10th. And coming off of that, by the way, the debate rules have also been agreed upon. We're going back to muted mics with both candidates, so that's exciting. When there was concern that there would be no debate at all. So a lot going on in the next couple of weeks in U.S. politics.
Maybe we'll start to get an idea of the policy. I think is so interesting. Ollie's point about the kind of the economic story, but I wonder who the pushback on the economics came from. The economics community, not from the wider population.
Yeah.
No, they loved it. They ate it up.
Precisely. Which I think is really interesting. Why get granular? Is that a risk really worth taking?
Yeah, but, again, you're running for office where you're going to be setting policy, so you kind of have to at a certain point.
But you look at Keir Starmer, really light on policy going into the election.
Yeah. I mean, arguably not the sort of most democratic way of going about things.
Okay, this is politics.
We want to talk about the transition team, but I think we'll leave that for later. Okay. The RFK, latest news overnight,
That's
anyway.
A whole other can of worms.
Kriti has diverted us. We're talking about politics. Well, we really should be talking about the fact that it's Nvidia Day. The company's earnings 4:20 p.m. Eastern, that is when they're going to drop. We'll talk about them more. Investors very much holding their breath. This is the most highly anticipated set of corporate numbers that we always watch out for. Is it more important than, say, a Powell speech? You could argue maybe it is. Anyway, we'll debate that next. This is Bloomberg. "53 minutes since the opening trades. In terms of the session and how it's developing, not much to write home about. Yesterday was epic in terms of its absence of volume. Today, I suspect, will be similar until a little bit later. Europe is going to miss the boat. We'll have to deal with it tomorrow because it's all about Nvidia. To be honest, it's all about Nvidia. London looking a little bit more interesting, but in terms of the overall story, the DAX is up a little bit today, but not by much. Anyway. I'll look over there because I can see that one because I can't see it over there. Let's talk about the Nvidia numbers. Second quarter results, third quarter forecast, which is going to be more important. Crucial barometer for AI spending, critical for the tech sector. Robert Lea joins us now from Bloomberg Intelligence. In terms of what we are anticipating today, we're clearly seeing huge amounts of spending from the hyperscalers. They are spending because the risk is greater that they don't spend than they spend. What does that tell us about where we are in this kind of AI process?
No, that's very right. It's fear of missing out, which I think is driving a lot of the behaviour in the market at the moment. And I think, as one of your guests said earlier, I mean, these companies, the hyperscalers, the large tech platforms, not just in the States, but particularly here in China, they're locked in a bit of an arms race at the moment, you know, trying to grab market share in the early days of this industry. So I think that's what's is driving behaviour and will continue to drive behaviour, you know, over the next 12 months or so. But at some point, I think we'll get a day of reckoning, because in my opinion, these companies are not monetizing their services anywhere fast enough at the moment. And, you know, are someone like me who specializes in tech, how many AI services do I subscribe to at the moment as a subscriber? Of course, I play around with them, and there's plenty of free-to-use products out there, but I pay nothing. And just based on a straw poll of people I've met over the last couple of weeks, you know, of about 10 people I've asked, only one is subscribing. So monetization, I think, is a key issue, which will probably raise its head tonight, and I think is the main issue to focus on over, you know, the coming quarters. These large customers that are spending tens of billions on capex per quarter need to start monetizing at a much faster rate.
Robert, 30 seconds here. I'm putting you on the spot. In addition to monetization, I also feel like diversification and adoption, to your point, are key issues. Where are we on that? What might that ripple effect look like? 30 seconds, if you can.
So, again, it's the hype that's driving things at the moment, the fear of missing out. I think Nvidia is trying to diversify its customer base because it's a very concentrated one, overly dependent on the hyperscalers at the moment. AI chips and products are very expensive business to get into. It remains to be seen how many companies out there have the budget to invest in this, particularly, again, when there are question marks about their ability to monetize.
Robert, thanks for updating us. We're going to look forward to continuing coverage throughout this entire event. Robert Lea from Bloomberg Intelligence joining us on Nvidia. Nvidia. We're going to sit down with Nvidia's CEO a little bit later on. Jensen Huang, Ed Ludlow is going to be talking to him. It is going to be a conversation you do not want to miss. Bloomberg Technology special coverage, 11:30 p.m. UK time. We've got the numbers coming out at 4:30 Eastern, 4:20 Eastern, probably is a more accurate story. We are going to count you down to that. We're going to continue to count you down to those key events. The Pulse is up next. I'll be walking you through the next hour. This is Bloomberg.